But I guess we start from like the foundational, like what are the top few things that we can do to increase our borrowing capacity, Sam?
Yeah, well, stability equals predictability in the bank size. So having that stable income gives confidence to the lenders. So it's not just banks, there's other lending institutions as well.
So what do we mean by stability? Like what's stability of what?
So consistent income is good,
Okay.
and consistent level of expenses that they can track is good. And there's obviously ways, as I mentioned last episode, banks are looking at your income, your expenses, and your assets to justify your risk profile, and that's going to lead into how much they're going to lend to you as well. So the first thing that I'd probably jump into is, looking at your debt that you've got at the moment. There's three key ways of actually, removing that debt, or like making it look prettier, as I say, in the bank's eyes, and that's to either repay it, to cancel it, or to consolidate it. So if we bring into an example, say for one of my loans that I was going for, I had a $8,000 credit card. I had it fully paid off, but it was the structure was still there. What I did, and what like a general advice around that is, if you remove that credit card, banks will look at it, even though you've got no money owing on it, they still look at it. Well, they've got access to max out that credit card tomorrow at $8,000, so they look at it as a liability, and they assess that as if you have the full $8,000, for example, owing to them. And what that does is reduces your borrowing capacity by generally 3 to 4x of what that limit is. So
I've heard it can be more as well sometimes.
Different banks. And obviously I'm not a mortgage broker. They'd be more savvy after that. That was just the advice from my personal situation at that time. And that's massive.
So let's give it numbers, right? Like let's give an example. Because I had one of my examples is like I had a business credit card which was like tens of thousands of dollars in credit, and I had to decrease it. Wanted to decrease it and was told by my broker to decrease it to a lot lower, and only for a 2-week period that the bank was going to assess my situation prior to getting the pre-approval. So you can decrease that limit and then expand it back out based on the lender that I was using at the time. Obviously, it's going to be different if everybody's different circumstances. But say if somebody decreases their credit limit to $10,000, just for simple maths, that means what would their borrowing, like even if you had zero, so let's compare zero credit card to a $10,000 credit card. A $10,000 credit card would reduce your borrowing capacity by 3 to 5 times. So that's what, 30 to 50 grand. Yeah.
And sometimes
less
more as well.
Less. So if you wanted to get a $400K loan and you got a $10K credit card with a 0.5 or x5x, maybe you can only get $350.
Yep. Okay. And that's a really simple way just to cancel the credit card for the 2 weeks. And reapply for the bank, and you have an extra $50,000, which can be a massive difference, because you're going to be increasing the quality of the asset too, from a $350,000 to a $400,000 purchase, and that'll also increase your rental income, because generally you'll get a higher rental income.
And so you typically especially from like $350 to $400, you could probably buy in a better area as well, right? And